everyone. So I would like to share some setups of the 330 macro for the previous week. So let's get right into. If we look at Monday, so here I have a template which shows the first fair value gaps as well as the ranges for AM and PM. So that's the 30 minutes between 9:30 to 10 o'clock and then 1:30 to 2 p.m. And we also have the ranges of the previous day and the last 3 days. So we're going to use this for framing the setups. So if we take Monday, 3:30. So here we notice when 3:30 price hits the market that we are at the 0.25 range of the PM session between 1:30 p.m. and 2 p.m. And here we notice how at 1:50 we took the high, and that's the previous day high over here. So we see this black level. So Friday was the previous day. And then 21,873. So we took that and we took the PM session high so far. And then we break lower. We have a shift in market structure. Then we have this liquidity void forming at 1513. And then when 1513.30 comes, we are in the first fair value gap. Notice how price is consolidating here. Then it goes and takes the buy stops. So this is the Judah that we are waiting for. And then price comes lower. It forms this fair value gap here, 1539. And then we can enter at the low of it, or the better, even one tick below. So we see how this price and this price is equal. So if we enter one tick below, then we are able to go short. And we can aim for this liquidity over here. Or if we hold it a bit more, we can aim for the first fair value gap over here from Friday PM session. And we also have the 75% range from the previous 3 days. So this would be a trade we could take. And then at 1550 here, see how it comes upper, but the body stays below. So here we are in the first fair value gap. We also fill up this fair value gap that was staying open due to the bearish breaker. And then we have this swing low like left intact, and then we still have the previous 3 days and the relative equal lows with the first fair value gap. So here we can go into another short. We have this CB over here, so we can enter. Notice how this is also the PM low range. Price just goes a little bit above it. Yeah, so this would be the setup for Monday. Now let's see Tuesday setups. So let's go to Tuesday, 15:30. And here notice how, let's see first on the 1 minute. So notice how this is a little bit more consolidation, which is typical because we have the CPI on the next day. So notice how Wednesday was the CPI and PPI, so we're expecting like a bit harder price action to trade on Mondays and Tuesday. And then here we want to stay away from the price, and then Thursday should be a better setup. So we see this kind of like high resistance liquidity run over here, but we can still find a setup. So if we look at Tuesday, we notice this 15 minutes liquidity void over here in blue. So notice this separation in price. And then what price was doing before, price was like up here. And then notice how price also ahead of 1530 was taking the Asian highs. And this is like the highest high so far in the last 3 days. So price tagged the buy side and then it starts breaking lower. And then it forms this fair value gap at 1515. And this is also exactly as the Asian high. It comes up, hits it, and then breaks lower. And at 1530, we get this very nice CB. And notice how price stays below it, below the consequent encroachment. And then we can target this internal buy side. And let's see if there were some other targets. So this would be like a low-hanging fruit. And then notice here how we could enter short. This is also a bearish breaker. It perfectly comes here, touches and goes lower. And then it takes this price. And then here we are at the high of the previous, I guess the previous day or previous 3 days. Let's double check. We are on Tuesday. And then here's the previous 3 days over here. We can see from Thursday high. And then price goes lower. Here it starts consolidating at the high of previous Thursday. And then here, notice so it takes the stall stops. And then at 1551, we notice this SMT divergence with ES. So here ES makes a higher high, where NQ makes a lower high. So we can notice that over here. And then this swing low seems suspect and price comes one more time below it. And that happens here. And we are also below the last 3 days and price is accumulating here. Then at 1554, we get the shift in market structure. So this is the first body that closes above it. And then this one has the displacement. So that shows that the price wants to go higher. It forms the fair value gap. Notice how it leaves this small portion open. And then we can target this buy side. And then we can target again the 15 minutes liquidity void that we showed before. And this is where price stops at 1559. So this was the setup for 3:30 macro on Tuesday. Let's see on Wednesday. So Wednesday was the session after the CPI, and then we have the PPI next day. So we see again like high resistance condition. But here is a nice setup. So we have the new day opening gap from from Tuesday. And then price almost comes down to hit it, but it doesn't really hit us, which shows us bullishness. And it takes the turtle, it does the turtle soup from the 1520. And then we have this first fair value gap here that could be an objective. So it's good to be like humble in this day and not hold it too much. So just take your trade and then run away. So the entry could be here. Here is the first fair value gap from the AM session when we have this small liquidity void. Stop loss could go below this first fair value gap, and to be a bit more careful, I added below the tail consequent encroachment from this candle. and then target this one. So it will be like 841 to 855. So it's around like a 10 handle trade. And then stop here. And we see how afterwards price goes into like seek and destroys, where it goes, takes the buy stops, takes the sell stops, takes the buy stops, and it's just very high resistance to trade. Let's see for Thursday. So Thursday, a bit nicer setups. We also finished the PPI, CPI, so the environment is a bit better. We still see high resistance, but it is like my favorite setup for the week. So notice here how at 15:20 we are in the new day opening gap from Wednesday. Let's make that a bit higher. And then we have this fair value gap, which is like a breakaway gap. And a very interesting thing about this fair value gap is like if we look at the 15:20 on the 15 seconds, we see this fair value gap of 15:20.45, price comes up, hits the consequent encroachment of it, or not hits it, but stays just below it. But notice how it doesn't even tap into the 1 minute fair value gap, because this is the candle that actually forms it. So it doesn't need to go above it. This is enough. Notice how we also have this bearish breaker, and then price goes lower. 15:30 we get this fair value gap, and here a very nice entry into it over here of 15:31, just below the consequent encroachment. Stop loss can be above the energy bar, and then we can target like internal liquidity over here, 1456. This will be like a low hanging fruit objective. So here we can get around 31 to 17. So we can get around 14, 15 handles. Price comes a little bit below it, below the 0.5 of the previous 3 days. So we can see it over here. So here is the 0.5. And here it makes this area very jagged, taking the sell sides. And then we have a very nice trade at 1550. Notice how this would be over here, wait for the 1550 macro. Price is still consolidating, then comes here, takes the sell stops at 1554, and then rallies higher. And only when we get this body close above the 0.5, the previous 3 days, then we know the price wants to go long. So price comes down, retraces here into the 0.5. Here you can enter, and one target can be over here. Another target can be over here, like in a buy model. We have the sell stops, and then it can go all the way up to the 1 minute fair value gap that we saw before. If we show that, so we have this fair value gap, and see how price comes above it and just stays just above the 0.5 of the previous day and hits the new day opening gap. So that's the setup. Let's see for Friday. Friday price was pretty consolidating. It's like a day when I pretty much don't even like to trade if I made money on the week. So, but we can still have a setup here, takes the sell side, and then comes into the fair value gap. But not so nice. So I would like to show the 1350 macro trade. Oops. So notice how Friday, yes, we have this 15 minutes wick. So it would be this one over here, 1315, and price comes and hits it at 1401. We are during the macro. This is also taking the high of the previous of the PM range, of the current PM range session, and then price makes a shift in market structure. We have this fair value gap at 1403. And then price comes up. We have the first fair value gap of the PM session. Price stays below the consequent encroachment of the 1403 fair value gap. We have a bearish breaker, And then we can target the internal range liquidity over here. And it can even go down to the first fair value gap of Friday AM session. And here, notice this entry in this volume imbalance, also just below the 1 minute. This would be the setup, and you can target, as I said, the first fair value gap, the AM session, and we can even target, if we look here, we have this low of the previous day, which is also the low of the previous 3 days. And then price goes even much lower than that afterwards. You can see this is the mean threshold of the order block from previous Thursday. The price just consolidates around it and stays in the AM range. From Friday. So this would be some setups of the 1530 macro and with the bonus of Friday. So hope you enjoyed this one.